Let's jump over to our flowchart. So the flowchart is over here. Now this is the QuickBooks desktop flowchart. We're doing QuickBooks Online. I'm just using this flowchart because it's a great flowchart for any kind of accounting system, and the forms for the desktop are basically the same as the online. So we're going to be in the vendor cycle. So remember, we're breaking out by cycle: vendor cycle, customer, employee cycle. If you're in a situation where you have a fairly basic business, then you often might be able to be on a cash basis for the vendor cycle. Now note, if you're on a cash basis for the vendor cycle, it doesn't necessarily mean that you're going to be on a cash basis for the customer cycle. Why? Because on the customer cycle or revenue cycle, you might have to invoice people, such as if our landscaping business did the work first and had to bill the client. That's just the way it is for landscapers oftentimes. I can't just be in a cash-based system. I have to do what's the custom for the business that I'm in. But even if I have to deal with accounts receivable over here, that doesn't mean on the vendor side, I'm going to have to deal with accounts payable. So on the vendor side, I'm still going to be, in essence, on a cash basis, if that would be the best thing to do, just waiting until the expenses clear the bank, recording them with the bank feeds with the check form, or that would be equivalent to, in essence, an expense form that's generated from, in essence, the bank. That's why we want to think about this basically in terms of cycle. Now, one other technical point with the terminology of accrual versus cash-based system, you can kind of choose to be in an accrual or cash-based system, but what you're really doing is doing the easiest thing most of the time and being forced to be on an accrual or cash-based system depending on the type of industry you're in. So, for example, on the vendor side of things, we can say, hey, look, I'm just going to pay for everything with the check form when the check becomes due. So when the utility bill becomes due, I'm just going to electronically pay it and record it with the bank feed. That would mean I'm, in essence, on a cash-based system. But you can still technically say, well, no, I'm also on an accrual-based system. It just so happens that that transaction is the same under an accrual-based system or cash-based system. Why? Because there's no timing difference between, in essence, when the work was done and when we paid for it. In other words, if it's a telephone bill, we got the bill basically right after the month that we incurred the service, we used the telephone. Then on an accrual basis system, I would record the expense at that point in time because that's when I incurred the expense. I used the telephone. But on a cash-based system, I would still record it at that point in time because that's the time that I actually paid for it. So you can, technically, you could say I'm on either an accrual basis or a cash-based system, but it just results in the exact same transaction because there's no timing difference between when the work was done and when you paid for it. When you enter a bill, then there is a difference, right? So now when you enter a bill, accounts payable went up, and you didn't yet pay for for it at that point in time. That means you're going to basically have to be on an accrual system because you're going to have to track the accounts payable, right? You could try to toggle in QuickBooks and be on a cash-based system, in which case it's just not going to record the bill until you pay the bill, and that's what the toggling between the cash and accrual basis is in essence doing. All right. So if we're on the vendor, let's think about the easiest system that we can have. That would be one where you just pay for the bills as they go through the bank feeds. We would use a type of check form, although it's going to be an expense form. Typically, if it's an electronic type of transfer, that would be the easiest thing to do. And it's usually not so dependent on the industry, but on the size of the business with the vendor side of things. As the business gets larger, you might have to track the accounts payable more, as we discussed. Now, some people still like to actually write physical checks. If you write physical checks, then you have more of an issue with the bank feeds. You're still kind of on a cash-based system, but I can't wait till the check clears the bank, or I could, but I don't want to wait till the check clears the bank and then record it when the check clears the bank, because I have the added problem of the check has to go from me to the other person, and they have to put it in their bank, and their bank has to talk to my bank, meaning there's a huge timing difference between when I write the check and when the check clears, when the bank knows about it. So what I want to do is track whether that check clears. Did the check get lost in the mail? Did the other person not cash the check? How could I know that? Well, I have to enter the check on my side and then wait till it clears the bank so that I can see that the check has cleared. So if you're still writing checks, then you can't really just be, you're still on a cash-based system because you're writing the check, we're entering it into our side, but I can't wait till it clears the bank in order to have the check clear the bank, because I want to write the check and then double check that it clears the bank with a bank reconciliation. The fact that we have electronic transfers lowers that timing difference. So instead of it taking a week to 2 weeks for someone to clear the check, it only takes like 1 to 3 days. So that means that timing difference allows me to, and I have a lot of assurance that it's going to happen timely, and therefore I can just wait till it clears the bank, and I can depend on the bank. So I have more trust, more faith in the system, and therefore I'm just going to let it clear the bank is the general idea there. So if you have checks, it's going to be a little bit more complex. If you're just doing electronic transfers, that's going to be easier. If you're a bookkeeper, that's what you want to try to convince your clients of typically. It's like, dude, you got to put away the checkbook. It's making things a lot more complicated. It's a lot easier if we can do the electronic transfers, because then we don't have to enter the actual checks. We can just wait till it clears the bank and automate the whole system with the bank feeds. Not only that, but when they come through on the bank feeds, they're going to tell us the vendor who you paid for with the check rather than having to look at the canceled check. So that's going to be a lot easier typically. All right. So the next complication is that if we have to enter bills. So now we're going to say, hey, look, when the utility bill comes due, when the telephone bill comes due, I don't have to pay it right away. I don't have to pay it for like 15 days. So what are my options? I could put all those bills on my desk or sort them in my email or whatever, and then wait till they're due and then pay them with like a check form or electronic transfer. That's kind of tedious to do, especially if you have a lot of them. And therefore, what you're going to want to do is enter a bill typically if you want to pay them as late as possible, which you might want to do for cash flow purposes, for example, so that you can hold on to your money for that extra 15 days. That will be more significant as we have more transactions. And then we can sort these in the system. We can sort the bills in the system by due date, trying to make sure that we pay them as late as possible. That's the whole game of accounts payable. What are you trying to do in accounts payable? I'm creating value for the business by taking all these transactions and paying them as late as possible while still being able to take advantage of cash discounts if they offer cash discounts in order to get paid sooner, and while hopefully not making the vendors angry with us by delaying the payment past what they want us to delay it for. So we want to be on good terms with our vendors, not piss them off. We want to take advantage of cash discounts, but then pay as late as possible in order to hold on to the money as long as possible to improve our cash flow situation, as well as take advantage of the time value of money. So when we enter the bill, we're doing an accrual type of thing then. That means there's no cash involved. It's increase in accounts payable. Accounts payable is an accrual account. We don't have it if you're on a cash-based system. And then the other side's going to the expense if we're paying for expenses, and then we're going to have to pay the bill. Now, the pay bill form is just an expense type form or check type form, meaning a form that decreases the checking account, but it's going to be a special one in QuickBooks so that we know that if it's a pay bill form, it's paying off a bill, meaning it's decreasing accounts payable. So we'll talk about these forms in detail later. Now, then you have the inventory. If inventory is involved, that's going to throw a wrench into the system because inventory also has an accrual component to it, and inventory kind of crosses over between the vendor side of things and the customer side of things because, of course, we first have to purchase inventory and then we sell the inventory, right? So it's going to be part of both the purchases cycle and the customer cycle. So for the inventory then, the question is, how are we tracking the inventory? Do we track it within the accounting system or outside the accounting system? If you have something like a Shopify store, for example, you might track it outside of the system in the Shopify store, entering it into the QuickBooks system periodically, tracking inventory, therefore, with a periodic inventory system. Otherwise, you're just going to pull in a whole bunch of information into QuickBooks, which might overwhelm the system and make it more complex than it needs to be. However, sometimes you might be tracking the inventory in the system, which means you're doing something similar to most stores that you go to. If you go to the grocery store and you check something out at the grocery store, then of course you can see the sales side of things, but the system is actually recording at the same time the reduction of the inventory and the related cost of goods sold at that point in time. So we have capability to do that in QuickBooks, although more complex inventory needs is usually when we have to have more customization. So we will be looking at a perpetual inventory system in our practice problem. Now, if you have a perpetual inventory system, then you also have the question on the purchase order side of things. The purchase order is like a request for the inventory. So, and that's a little bit different than what we're normally used to purchasing for ourselves. In other words, if I buy something from an online store like Amazon, I usually have to pay for it at the point that I order it. And that means it's basically mine even when I place the order, in essence. I already kind of own it and I'm kind of responsible for the shipping, in essence, in some respects, right? Well, I won't get in that in detail, but a purchase order would mean that you have more control over things. You're going to be saying, I request 1,000 teacups or something like that or whatever. But I'm not paying for it until you actually ship it to me. So then they're going to ship it to you, and then you're going to have the bill, you can imagine, in the box that has been shipped to you, and then we take the purchase order and record it into the system basically with a bill. So if you're dealing with inventory, you may or may not have a purchase order depending on the type of system that you have with your vendor. And then you're going to have to enter the bill. But as you enter the bill, you have the added complexity of tracking the subledger for inventory, meaning I don't need to track only the dollar amount, which is what I need to do normally with a bill or a check when I pay like the utility bill. But rather, I also have to check the units of inventory, because I have to track the units of inventory in order to physically see the units of inventory to know when people are stealing the inventory or something like that. And then, of course, we're going to pay the bill for the inventory. So we'll get into the purchase order and the inventory. And so, again, if you don't have those two items, then you have a more simplified system, and you might be able to say, well, that's great. I don't need to deal with the inventory. I don't need to deal with bills. All I'm going to do is a check form with an electronic transfer. That's great. That's what we're trying to figure out here. However, there's one other huge thing. That's going to be taxes, and it's going to be a type of usage tax. In the United States, that would be a sales tax. And the United States, we have a federal income tax system, which is an income tax, but then on the state and local side, you might be also subject to state and local sales taxes, and that's going to be a complication as well. Now, taxes are kind of messy, because the idea of like a usage tax is that you're applying the tax to the customer. The customer's paying the tax, but you, the business owner, have been made into the government's collection arm, which is kind of sad. I hate that. But that's what happens. So on the sales side of things, we're going to have to record the tax with an invoice and the sales receipt. And so that'll impact the sales documents as well for us to determine what is going to be paid. But you can think of the tax as also a payable item, because, of course, we're going to be increasing a tax payable. We're not going to be able to keep that money. We've got to then pay it to the government in order for the protection money or whatever the government is providing to us. Not too much protection over here in California. Hopefully it's going to get better now. But we're paying them for the protection money, for God, for crying out loud. Do your job, government.